Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish engulfing pattern yesterday as the recent market's rise approached just a little too close to the first heavy-duty declining piece of resistance. The market pushed back down below the middle time, currently 106.99, of the well-highlighted January to May 2021 bearish Andrews pitchfork. Now this pitchfork continues to direct and show the overall bearish angle of attack of this market, as it has done now for over a year. We also saw the market push back down below the April 2020 low at 107.25, but hold ahead of testing the next support below, the 2020 low at 106.35. Now, some might say that it was the middle time which caused the pullback down, and they would have a point. Some might say it might be a resistance at the May 2020 low which capped the market, and I see their point, but I'm not really sure on that as an idea. What I would say is the one piece of overhead declining resistance that hasn't been yet tested, but which seems to be having the most impact, is the short stroke medium moving average, currently at 107.71. I would justify this by asking you to look up at the last time the market approached the short medium moving average back at the end of March, and the resultant move lower. Looking briefly now below the 2020 lows at 106.35, the better support starts from the April 2017 low at 105.68 and extends lower thereafter. So far today, well, nothing much. Move up to the middle time, but then back down to the area of yesterday's close. The downside is still supported by the 2020 low at 106.35. Cable, aka sterling against the US dollar. An immediate countering bullish harami after the previous session's reactionary bearish harami. Initially, the market dipped back down into the congestion zone between 124.78 to 125.09, which contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89. However, the market once again did not like it down there as the prices pulled back higher to close well clear of it. We're still actually in a fairly free area, with historically only the high from 3 weeks ago in the 126.35 area as any form of resistance, until the September 2020 low further up at 126.72. However, we're starting to build a small resistance area this week in the 126 even area. So far today, an attempt to penetrate higher through the 126 even area, but it has been seemingly a half-hearted attempt, as we're back below it again around where we started today right now and looking like an indecisive doji cross. Euro sterling. A really interesting piece of action yesterday. A huge bearish engulfing pattern that created a pipe top and may well have created a possible double top over the whole of the May action. The market halted ahead of testing down to any significant support levels, but it still means that just below current levels we have support from the following. The April 2021 low at 84.70, the broken September 2021 to date downtrend currently 84.69. That makes up the upper trend line of the extended diamond pattern. The flatlining long moving average currently 84.42, the upper trend line currently 84.16 of the smaller and more robust lopsided diamond pattern, and finally, moving up and into the frame, the short medium moving average currently 84.11. For the moment, we still have on the upside for the smaller lopsided diamond pattern a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And for the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Additionally, there is also one final pattern, and it is the big one, which this market had previously triggered but then sent mixed messages on. I've spoken for weeks, months even, of the very large falling wedge pattern, currently 84.69 to 81.61. This pattern is still in operation, but it has fallen into the shadows a little with the rising prominence of the diamond patterns, and though triggered, this pattern still leaves us with some questions. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area, and that is a really big ask. Well, so far today, small reactionary move back up and very limited test lower, but the market is hanging around more or less a little above where it closed yesterday. And that's just about it at the moment. It's a reactionary move back up from yesterday. US dollar against the Indian rupee. An indecisive spinning top yesterday, though, could also be seen as a bullish harami. It was once again well within the new congestion zone between 77.40 to 77.80. Overall, prices are still in between the lower time below, currently at 77.06, and the middle time above, currently 78.52, the mid-January to early April bullish Andrews pitchfork. We also still have overhead target X in the 78.30 area. This is the potential target for the whole of the market, well, whole of 2022 actions, being a possible bullish halfway hesitation, over which the market is seemingly still trying to make up its mind about. In between there and here, we have the previously mentioned middle time, also the upper trend line currently at 78.26 of the late August today ascending, expanding wedge pattern. So far today, a slightly higher open and an immediate move higher, though again limited in nature. We are, after all, still within the 77.40 to 77.80 area, the new congestion band, if towards the lower end of it. US dollar against the Brazilian real. A second consecutive indecisive spinning top yesterday, thus continuing the halt, if not ending, a recent move lower of nearly 2 weeks in duration. This time, the base of the main range was on the June 2020 low at 481.62, and the upside pierced the previous resistance of the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26, only halting ahead of the declining overhead short medium moving average, currently 487.18, and then before closing back below the 50% Fibonacci line. Looking below the June 2020 low, 481.62, we still have the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. This has helped form the low for May so far. Meanwhile, above the short medium moving average, we have the 2021 low at 489.08. In the bigger picture, we are still in between the upper time, currently 509.93, and the middle time, currently 463.83, of the start of 2022 to date bearish Andrews pitchfork. This is an early in development bearish pitchfork, but it may have some merit in forming and hence showing the bearish angle of attack of this market. US dollar against the Mexican peso. Yet another insecure pattern yesterday. It was a third consecutive indecisive pattern and a second consecutive, if slightly lower, indecisive spinning top. Overall, the recent top of the market is still defined by the lower trend line, or uptrend if you will, of the June to October 2021 descending triangle pattern. That's currently at 20.06.20. And with the descending short medium moving average currently 20.12.67 moving down towards that. Meanwhile, the base has the attrition evidenced by the market moving down through the late March and April base double bottom congestion between about 2010 down through to the 1971.68 area. I've recently asked the question of this market, is the mid-April to date action a possible cat's ears pattern? Well, I think this pattern has merit, and I've been minded to place, let's say, conservative target X below, though if the move down should happen, it will probably extend further down, as it's a bit of a lopsided pattern. I've used the minimum size move possible for this pattern, thus target X is in the 1954 even area. So far today, well, a test lower though, not by much, and with a narrow range for today. Now, I'm minded to think that this effort today is perhaps a more serious, if quieter, attempt lower than the ones during the previous few days. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.